Hello guys, I'm Richard, Head of Trading here at Corporate to Retail, and I'm just going to give you a brief midweek rundown, what's going on in the FX world, how I see it, what's running the show at the moment. It's been an interesting few days. It seems to have changed the overall landscape, the pattern of what's running FX. For the last month or so, I've constantly been going on about the massive rally in yields. The US 10-year going from 0.9 up to 1.75, 100% rally almost, and this led to a big rally in the dollar across the board. Euro dollar from 123 down to, where are we now, 118. Cable 143 down to 137. Dollar yen 106 to 109 and a half. Aussie, Kiwi, dollar Canada. We saw the dollar rally against everything, and it made trading a little bit easier when the dollar's all one way. You can see patterns, you can see maybe what's lagging behind a little bit. But just in the space of the last 3 or 4 days, things seem to have changed a little bit. We've had yields are off from their highs. The 10-year is down, been below 160, or 1.6, which should have led to some dollar selling, and it hasn't really been the case. I think the main reason for this is we've had there's been a lot of talk in the press about the rise in COVID cases across Europe. We've had talks of a third wave. Lockdown is back again in many European countries, and it's kind of, there's been vaccine issues. Vaccine restrictions in getting it out there across Europe, and I think this has kind of turned things into a more of a risk on, risk off, good news, bad news environment. What we saw last year from March through to the middle of the summer, it wasn't about the dollar, it was about risk on, risk off, good news, bad news, and it seems to be what's happened over the last 3 or 4 days. As I said, the 10-year, which was dominating the FX moves, is lower, but the dollar has continued to stay strong. With this risk on markets, we've seen euro stay under pressure. We've gone through the 200 daily moving average there. Looking back, that breakthrough 120 a few weeks back is now pretty significant. And whereas before people were looking to buy the dip, I think they're now looking to sell the rally. Sterling dollar cable 137, 60, 70 was a massive ascending line of support going back to February last year. If you have a look at the charts, have a look at the daily charts, there's a lovely line of support going up from February last year up until 137, 60, 70, and we broke through this yesterday, and it looks pretty heavy, sterling. It really does. We've obviously got our own issues with COVID over here. And it's just having a knock-on effect, and it's a kind of a case where pretty much everything is heavy at the moment. Equities have been sold, the yield has been sold. Oil, up at 67 last week, been down to 56, I think. That's a big move. Again, COVID fears. We common sense says the effect that what that's going to have. So it's tough markets. Just as everyone gets used to trading one kind of style, suddenly in the space of 2 or 3 days it flips, but you're still trading the old style. So it's it takes a while to work out that something new is dominating the landscape. I read a lot of bank reports. A lot of the big banks put out daily reports, and I read a lot of this stuff. And you've got massively contrasting views. Goldman Sachs, one of the biggest, most respected banks out there, they are calling for the dollar lower over this year. They're saying that we should use this opportunity to sell the dollar. But you've got someone like JP Morgan, again, a massive bank that a lot of people listen to. They're completely the other way. So if you've got two major players like that, completely different ends of the scale in what they think is going to happen, it shows how difficult it is at the moment. Me myself, I'm going to keep things light. I'm not going to go crazy. I'm going to let it settle down and see what happens. I'm not too sure where we go over the next 6 months now. It's, maybe possibly we need the COVID situation to improve in the coming weeks to get rid of the risk on, risk off view, and then we will go back to a dollar play, which I believe is a lot easier to understand. So it's tough markets out there at the moment, and that's kind of my views on it. So safe trading, and I will speak to you soon.